Hey guys, Mike here. So still here, and I don't know, I think we got like a tropical storm or something for my area. As you can see, it's really windy. Had a lot of rain today, but I don't know. Everything seems to be going okay. So figured, what the heck? Might as well put a video out because there's a bunch of news that came out today driving the market down. That is obviously huge red day in the market. But we're going to get into all that and then talk about what the most worrisome thing that happened today actually was. And I've covered this in the past to kind of prove it. But if you look right here, I mean, this right here came out last night. Amazon raises hourly pay through $1 billion investment. And I can only imagine Jerome Powell sitting there going, "Oh my God, regular people making more money. This gives me such a headache," right? I mean, because what he keeps talking about wages. And of course, now wages continue to go up. So good for those people. Congratulations, by the way. But obviously, that just tells the Fed, like, gonna have to ratchet down more. Got to make more people lose their jobs, right? Got to drive those wages back down. So whenever I see headlines like that, I don't know, I always kind of get a good chuckle because I'm happy for those people. But I'm just thinking about Jerome Powell sitting in his house or whatever, and somebody's calling him up saying Amazon's raising their wages. What? Oh Lord. And so, yeah. And then, of course, I told you I'm watching the 30-year fixed mortgage. Bam, up to 6.7%. It'll be 7% probably in the next 30 days, which we haven't seen in quite a while. This is the highest since 2007. And, of course, here comes Nike out with earnings. And, inventory, boom, up 65%. And they say they will liquidate excess inventory more aggressively. And so, yeah, that's going to be fun to watch. And I totally kicked myself. Those who bought puts, congratulations. I literally told myself this morning to make sure I buy puts, and I got to working in my garage all day long and forgot. And it was like, God, and the stock's down like 10%. So congratulations to you. Sucks for me. And if you bought calls, sorry for you on that one. But again, here's another big retailer with inventory issues, right? And so... and they actually beat their expectations, but I mean, I think obviously looking forward, you're going to see a rough next quarter for them, especially if they're discounting all this stuff. So if you're looking for a pair of Nikes or some apparel, you probably get a good deal on it. Remember what Walmart did? I got some great deals on Walmart. And then, of course, the Bank of England clarified they're actually committing 65 billion euros to buy long-dated bonds to bail out the country's pension industry over the next couple of weeks. And the reason why this is important, I read up a little bit more on this, is because the global pension fund, I think, is worth like 35 to 40 trillion dollars with a T. I think over there in England it's like 4 trillion, and it's about roughly 120% of their GDP, so it's pretty big. And so they cannot allow anything negative to happen to these pension funds. That would be far worse than what they're doing as far as how they're going to basically, not positively, but I guess in a way negatively affect inflation by not being able to fight it because they're buying bonds again, right? But they're putting more liquidity in the market instead of taking it out. But it would be way more catastrophic if they let something happen to their pension funds. And so, and I've showed a video here, I couldn't really find, but I know I did a video showing that, like, even in our pension funds here in America, the government pension funds, that the gap is so big between what they're actually bringing in and investing versus what's going out, what's expected to go out. It's unbelievable because these pension funds all over the globe, not just here, are using so much more leverage. So when things go bad, like they are now, guess what happens? See you later. And so they're trying to avoid these liquidity crises over there with the pension funds and all that fun stuff. So that's why they're doing it. And you knew they had to be painted into a corner very quickly to do that. And if it happens here, if something happens to our pension funds, you can guarantee you the Fed, somebody's going to step in. They got to. That's just the way it is. And speaking of the dollar, a picture is worth 1,000 words, guys. And here's the dollar. You can see it's up 22% on the year, right? Let's see where the other currencies are. Let's see the Canadian dollar, down 8%. Australian dollars are down 12. Euros are down 18. British pounds, 22. Japanese yen, 23%. And yes, I'm sure, again, everybody just saying, don't worry, it will be fine, folks. And please hit that like, subscribe button and share the video if you get a chance. I certainly appreciate it. Now, what's more concerning to me is not what's going on with the S&P. It is what is going on with the NASDAQ 100. I did a video. I will link it at the end for those who have not seen that, proving and showing to you in the dot-com bubble and the '08 crisis, which kind of is what this one compares to as far as like how far we're heading down into this bear market. I don't know if we'll reach those levels, but it's about the the best comparison I can show you with the channel we're in right now. And I showed you the NASDAQ 100 in both instances bottomed. It came back up. We went on a nice little rally, and then that's when the S&P folded over because all the energy folded over. We hit into a deep recession, and so all the commodities and oil and everything else, energy stocks, imploded. And those stocks, of course, aren't on the NASDAQ 100. And so they ended up, the S&P falls below where the NASDAQ bottomed at, but the NASDAQ 100 did not break their lows that they had previously set, right? Well, today, guess what? Temporarily, at least, we did actually break the June low, which was, if you look at that bottom, that's where you had like NASDAQ 100 stocks sitting there, at like a 2% or whatever above the 200-day moving average. You can see right here, there's the line that we broke below. They fought back up. We're right there. And so we are technically right below it where we closed. And you can see this trend line I drew that goes way back here. And I always like to draw these kind of lines on pretty much any stock I'm going to get into or I'm interested in or anything. Just kind of see, where is the happy place for this stock or this index? Where does it always come back to? And you can see that trend line. It rejected off of it multiple times. It was support multiple times over all of these, like almost last decade. And you can see right there, it's only like 2.5% around that trend line. And so that's not exact science, but I've actually looked on many charts as far as the stocks and everything. You can see how many times going back almost a decade it has bounced or been rejected off of it or whatever. And so it's not down to precise 2.5%, but there's a range there, right? And if it breaks below that, that's a whole different story. But the fact is, if it really breaks below the June low and starts trying to set a new low, I don't know where the bottom's at. Is it around that trend line area or is it even farther? That's what the more concerning thing for me is, not the S&P. I've said the S&P was going to set new lows anyway eventually. Didn't know when it was going to be. But whenever oil and energy rolled over, all those stocks that were so far up, above their even 300-day moving average and so far extended, when all that stuff starts to roll over because of the recession that we might be going into or are going to, are already in, since we already got the GDP data out today and it was negative 6%, which gave us 2 quarters of negative GDP, which is the technical definition of what a recession is. But remember, we changed the definition of recession. Not really. We just have that group up there in Washington that has to come out and officially say we're in a recession, and they have many different metrics, but they have not done that yet, and I don't expect them to before the election. So, but getting back to what I was saying, the S&P doesn't worry me. It's the NASDAQ 100. That's what I'm looking at more and paying more close attention to, and the fact we did break that June low, whether or not we move back above and start to hold it and base out, who knows. But that's really what you're looking for, because I prove, again, I put the video at the end, that the NASDAQ 100, it bottoms before the other indexes, okay? And so that's something to keep a very, very close eye on. And of course, the story of the day was Apple once again, 7.5% of the S&P by itself. I forget how much it's weighted on the NASDAQ. It's more than that. But, you just look at it, it's right there. And, where's it going? Nobody knows, right? I mean, you got these 2 support levels coming up. And so is it going to stop at 142? Is it going to go down to 130? And you can see the MACD. To me, the MACD on the weekly looks like it's crossing over right there. It's hard for me to tell. But you can see on the RSI, it's below the 50 line. And last time that happened was right here. And when that happens and it's heading south like that, it can be a pretty nice drop. I mean, last time it was around, 18%? Before it started running back up. And so that's something to look at as well, just because it's so heavily weighted in all of the indexes. And then, of course, the last thing I like to talk about is, what is the risk traders doing? The smart traders, they're in the bond market, right? And I'll pull this up many times, before the year is out. And you can see HYG there, your high yield bonds, right? And this tends to lead the S&P. They tend to move first. And you can see we're getting a divergence again, right? The HYG is heading up on the hourly. You can see right there it's bouncing off that trend line, heading up. Well, what's the S&P doing? The exact opposite. It's still heading down, following that trend line. And I've showed you this before when this happens. So this is basically people who are doing risk every day, these bond traders saying, hey, you probably oversold the market. Maybe we need to move up. Now, of course, we're going to see if this plays out, because I want to see if it gets above that trend line I got drawn across there that it broke below. But when this has happened before, we've seen good things happen. Of course, when I'm talking about good things, I mean like a short-term thing. And again, we're going to see how this plays out. Does it continue? And I want to see if it gets above that trend line that it broke down from, which I don't think, I if I remember correctly, we hadn't broke down through that since like 2018 or 19. So that's actually a big significant trend line that we'll have to get above. But on the hourly, bond traders are saying, okay, time to move up, and S&P saying, no, we're going to keep moving down. And so the last time this happened was actually it was during the June rally, right? Bonds, HYG started moving up first. S&P was still heading down, and then finally they turned, and then before we sold off in September, bonds, HYG had started turning down, and the S&P said, no, party's still on, and the bondholder said, no, it's not, get out of there, and then boom, bottom fell out, right? And so they tend to lead. Doesn't always occur that way, but we'll see if this divergence keeps happening, okay? And I'll keep you apprised of that. But, tomorrow's Friday. I mean, Fridays, nobody's really taking on too much risk, so it'll be interesting to see what happens, especially after the sell-off like today, which is just broad across the spectrum, it seemed like. And we'll see. And then, of course, a lot of people don't like to hold over the weekend, especially in this market, right? And so, well, we'll have to see. But I want to thank everybody for all the comments and wishing us well. And I hope everybody in South Florida is okay. They usually always get the brunt of the hurricanes. People in North Florida, we're just up here waiting for it to slow down. We usually get tropical storms. So supposedly this thing may go back out in the ocean, power back up, and go into maybe South Carolina or something. If that happens, obviously wish everybody the best. Buckle up, be safe, don't be foolish. I saw some, I don't know, people in the news jogging over a bridge or something close to my area. I mean, it's just fools like that. I mean, I don't wish anybody bad, but just stupid be jogging across a bridge in a tropical storm. But I guess each to their own. That's what we got here. So anyway, hope you guys have a good night, and I will see you later.